So it used to always be said, and I'm probably sure it's true even today, that insurance is never bought, it's sold. Am I right? So how have you then changed the dynamic? Because if a large part of your charges were actually going in commissions to acquire customers, would you say the game changer has been digital, online? Because otherwise, how do you incentivize the same person who you were incentivizing in a certain way 5 years ago or 10 years ago to now say, look, I can't give you this much, but you still got to go and sell my product. So how's the industry managed this?
So it's a journey. First is that there is still a very large part of the population which needs to be touched. We need to have face-to-face discussions with them and convince them that there is a need to have a part of your financial assets and products like this. So I don't think for an insurance company to survive in the long term, you can do away with a distribution or distribution channels or a distribution system which allows you to touch the customer on a face-to-face basis a couple of times. Because there are enough customers out there who need to be educated, who like a face-to-face discussion and want to be convinced, etc. But yes, gradually, slowly, as the products are dumbed down and they become more and more commoditized, or the offerings are well understood, like for example in case of mutual funds now, even though, as you were rightly telling me, people have invested in too many mutual funds and I think they don't understand what that mutual fund does, but assuming, just taking it out for a minute, as the products get dumbed down, yes, more and more people will come online and more people will either buy, since PolicyBazaar is working with you, people like PolicyBazaar, or come directly to our websites because they trust the brand and they might be buying directly from us because they believe that yes, it's a great company offering the right product and I want to be invested with them. So that trend of buying more online will increase. Now, when will it take off, as I said to you? I don't know, but people are getting more and more comfortable. So first is, people were told that ULIP products are not good and they're being missold. Now gradually, slowly, gradually, I think a lot of people are understanding, no, there is a set of ULIP products which are great actually. And the size of the population which understands this will gradually increase. Now, as they keep talking to each other and as the notion around ULIP changes, that it is as good or even better than a mutual fund product, as long as you have a long-term horizon, I think more and more people will come online because the product is well understood. There are almost no charges to the product. So you don't have to be worried. You know what I'm going to be charged. Don't worry about what is happening in the background. My charges are almost lesser than the mutual fund. I know I'm locked in for a period of 5 years. Yes, if I'm a savvy investor, I have the right to switch if I want. And if I'm locked in for 5 years, I'll hopefully, if the markets do well, I'll get a good return. And that's what you have to be worried about. And by the way, it comes with a term cover also attached to it. And my maturity proceeds are all tax-free. So as long as that is understood, I think people can very easily go online and start buying these products, which is, I think it's only a matter of time before that happens.
It's been a pleasure talking to you. Thank you very much
for
joining me for this coffee. Thank you.